All right, this is the annual update for Texas Vestments Worldwide Investment Club. Our fiscal year begins in July, a little bit late this year, so we're doing this in September. Um, the return, as you can see, last year was 2.92, which is not our best year at all. Matter of fact, I checked, and it's the second worst year we've had since 2015. The worst year was 2017 at somewhere around 1.9 something percent. So we did not beat our benchmark, which is the Dow. I think it was at somewhere around 10% last year. So didn't beat the Dow, but not going to complain about 3%. It's not good. It's not good. Definitely want it to be better. Right now, we're sitting at about 32% cash. So we have a lot to buy. As you can see, we have some empty spaces here. We are going to see about getting those filled this week. Okay, so currently we are in IPG, Rogers Communication, Enbridge, Coca-Cola, Corning Medical Properties Trust, and Regions is our largest holding. That's Regions Financial, the bank. So again, our fiscal year starts in July. So we've had a couple years of returns so far. You can see we're currently at 1.61%. So I think it's a really good start for the year. If we can continue this, then I think we will do fairly well at beating our benchmark. All right, I want to take a quick look at performance because percentages are one thing, but I really like to look at the actual dollar amount. And so what this is every month we calculate exactly how much we've made that month. So you can see all the numbers here. For the month of August, it was only $73, but you can see all the numbers here going back to 2016. All right. The other thing to take a look at here is the basically average amount that we've made every month since we began in 2015, and that's right around $271 or 7.4% per year. All right. Over the last 12 months, we have made $379 a month, but that only gives us 4.4% a year. Okay. And that's the reason why I like looking at the dollar amounts and not necessarily the percentages. Because if I told you that I have an investment for you that can make you, roughly 7.5% a year, that's not bad, right? Not a bad deal. But again, the dollar amount matters, right? So 379 over the last 12 months. If we stretch this out over 3 years, however, we're at 456, and that has actually fallen because that number was somewhere around 500 and change. So definitely want to keep an eye on that. And again, really looking to do a bit better this year than last year. All right, the other thing to look at, just some statistics here. This gives us these colored areas, gives us really kind of what our outlook is as far as what we can expect from this particular portfolio, right? So 84% chance stocks go, sorry, every month, right? We either lose 1.5% or we gain 2.5%, which is awesome, right? This is over the last 12 months. Okay, over the last 12 months, we have not lost any money at all in any of those months. And that's the reason why the lowest that we could possibly make is an actual gain of 0.13%. But we haven't done so well over the last 12 months. So the most that we can possibly make is 0.6% a month. And then over the last 3 years, you can see it's actually better with a loss of only 0.13%, but a gain of 1.25%. And so for me, that really kind of tells the tale of where this portfolio is going. Like I said, it started in 2015, and so I think it's gotten much better. Some years better than others, of course, but it's gotten better over time, right? And so this is looking at a 70% chance, 93% chance, and then the 99% chance. So the way statistics work is the higher the probability, the higher chance of something happening, the broader the broader the possibilities, right? So over the long-term performance of this portfolio, right? Um, we have seen anything from a loss of 7% to a gain of 9%. Okay. And so what that means is going forward over the next year, over the next 2 years, every month we stand a chance to either gain 9% or lose 8%. Okay. The good thing about this number though is, like I said, it's a broad extraction here, so it's not going to be right on point, right? But the important thing is there's a chance that we're going to gain more than we lose. Okay, and we see that is the case throughout all of these. We're going to gain more than we lose. Okay, over the last 12 months, there's a 99% chance that we either are going to lose 0.5% or we're going to gain 1.29%. Okay, then over the last 3 years, you can see it's a little higher, but the loss is also higher, right? So taking a look at the scatter plot, I really like this thing because it really puts those statistics in perspective, I think, right? So each dot represents an actual monthly return. Okay, so this one is April of 2021. That month, we had an 8% gain. Okay, and it's way up here. This one is March of 2017. We had a 12% gain over a 1 month period. Okay, all these blue dots are hovering right around this zero, right? Just a little above the line. There's some that's a little below, and then we have some of these, what we call outliers, right? These outside things. But what we want to look at is the average. What is most likely to happen, right? What is most likely to happen? And then what is the trend, right? Is the trend trending up or is it trending down? And as we can see, it's pretty much the same. It hasn't moved quite as much. The one thing that has changed a lot is you can see since October of 2022, there has been no outsized losses, no outsized gains. Everything has been pretty stable. And that's what you want to see, right? This is money management. This is not making money. This is making sure that your money is making money, right? That it's not losing value. All right. Better than a bank, right? You can definitely get a CD. I think at about 5%. Maybe there's some CDs out there a little higher. There were anyway. But it's really hard to get that sort of performance by just putting your money in the bank, right? The other thing is when you put your money in the bank and you purchase a CD, your money is locked up. You can't touch it. And usually the higher the interest rate, the longer you have to keep your money sitting there, right? With this, I have access to the money all the time, right? It's never locked up. I can always access it, and I'm still getting a better return than just having the money sit in the bank. That's what this is about. When I talk to people all the time, I talk about investment. I say it's the worst way to make money, right? Now, if you want to talk about like trading, right? That can be a part-time to a full-time job. That, of course, you can make a lot of money, but it's no different than working a job or having a business, right? You put a lot of time and a lot of effort into it. With investing, it's passive income, meaning that you don't put in a lot of time, effort, or work into it. The money kind of just does what it does, and you receive basically a small return for that. It doesn't mean that you can't have a great month or a great year where you return 10, 12, 30, 40%. It's possible, but highly unlikely if you're actually doing real long-term investing. Okay. All right, let's take a quick look where our portfolio is. Let's talk about what we got going on here. All right. First things first, Interpublic Group Companies, advertising company. We purchased at $37. I don't remember how long ago we purchased this. I may talk about that in other video, but yeah, Interpublic Group Company, advertiser company. We're currently down roughly 16%. I did do an analysis on this company, and As of right now, it is fairly priced, so not looking to purchase any more shares, but definitely not in any trouble of losing any money on this. Matter of fact, there is a bit of upside to this company. So we're just going to kick back and wait and see kind of what happens. Keep an eye on it. Anytime that we go less than 10%, so anytime we're down more than 10%, I always do a financial analysis just to kind of see what's going on to determine whether we're going to buy more, if we're going to sell, or what, right? So right now, IPG, we're just going to hold on to. All right, Rogers Communications. I'm actually in the process of doing the analysis on this one. We're down almost 12%. Again, this is a long-term holding. We've had it at least a few years, if not more. We purchased it at 47. I think maybe right now sitting at about $40. The other thing with Rogers is that they're a Canadian company, so we do pay a bit of Canadian tax on our dividends, and so that's what you see here in the way of commission. All right. Same thing with Enbridge. Enbridge is a utility company. Again, it is Canadian, and so we do pay Canadian tax on our dividends. We are currently up just a bit, like 2% on this company. We usually look at selling when we get above 10% gain on a stock, and so that's the reason why we don't have a buy or a sell signal here for Enbridge. All right, Coca-Cola. We are very close to reaching a sales signal on this one. Matter of fact, I have been selling options, or at least I sold an option to sell shares at around $72. And the price did go up to 73. Now it's back to like 71 or something like that. So I'm going to continue to sell options and make money on selling this thing at 72 or 73, whatever we can get it at. In the meantime, it's going to continue to pay us our dividends. So not mad about that at all. Okay, we don't have a health stock. We sold out of it. We don't have a basic materials stock. We sold out of that one. And this one is supposed to be, I don't remember. Energy. Yeah, energy. Don't have an energy stock. We sold out of that one. So these are just placeholders, right? They don't really mean much. All right. This is our largest holding at 19%, Regions Financial. We're in at $25, mainly because when we purchased this company, we purchased it through options, and we made quite a bit on those options, and that's why we got it at a higher price. If you look at how much money we made on the options versus what we got it for, it really evens out to where now we're actually even. Matter of fact, when I log into the brokerage account shows that we're actually up on this particular position. But the way that I account for it is that option money that we received for purchasing this stock, that cash goes in our pocket. Okay, so I do not, I don't make the subtraction from the stock price that we purchased it at based on those options. I don't do that. Okay, the option cash goes in our pocket, and whatever we got the company at, that's what we got the company at. So we're currently down about 11%. I did I did do a analysis on this one. I don't know if I posted it yet though. But anyway, we're in at 25. Currently, we're sitting at the stock is about $23. So getting close to selling some options to sell out of this thing. Regions Financial, the options market is a little different. It's a lot of these companies, you can sell options by the week. Regions Financial is by the month, and sometimes every 3 months. So I don't want to lock into a 3-month option. That's far too long. It's way too much risk. With those long dated options like that, I can option to sell this thing, let's say at I don't know, $26, $27, right? But if the price goes to $30, well, I'm just sitting there and I can't sell our position as long as I have that option sitting there. So and then, like I said, at $30, I will be forced to sell it at 27 versus the 30. So this one is a little tough as far as selling options to sell out of it. But again, we're getting close and really looking forward to it. You can see, like I said, it's our largest position, and the total purchase on this was $20,000. So once we do sell out of this, we will have lots of cash to play around with to get some more shares. All right, Corning. This one we are currently up about 4%. And again, I've been selling options to sell out of this thing. Um, made money last month, and I've been looking basically every week to sell options at around $43 on Corning to realize a decent 10% profit on it. Uh, don't currently, well, no, I do actually, yeah. So we do currently have one option to sell at about $44. That one is going to expire, and then I'll be looking to sell two more options on this thing next week. All right, Medical Properties Trust. This is our worst holding right now, currently down 55%. I did do a financial analysis on this one, and it is a wait and see. Currently, right now, our dividend is only about 3% a year on it, and I have been able to sell some shares. I'm sorry, not sell shares, sell options to sell some shares, and so we've been making some money that way because some of these shares we actually purchased at $4, and so the stock price is sitting at $5. So technically, I can sell some of the shares that we purchased at 4 for 5, and that'll be a small benefit for us. And so that's what I've been doing is selling options and collecting those dividends. I think they have another quarter coming up in October, so I would definitely be going over that just to see if anything has changed, what's happening. But it's a very interesting story. And if you are interested, like I said, there's probably about, I don't know, 3 or 4 different videos I've done on Medical Properties Trust. It's pretty cool stuff. All right, this is another blank space, just a space holder. And then the rest of these are our orphan shares. These are companies that we may have had an uneven number of shares. For instance, I remember specifically Energy Transfer, probably back in like 2015, 2016. We had, for whatever reason, 101 shares. We sold 100 shares and we had 1 share left over because when you sell options, it's for 100 shares. So if you have 101 and you sell 100, then you're left with that 1 share. And we can, of course, sell that 1 share. But I'm just holding on to it. It does pay us a dividend, even though it's like 20 cents. If you look at the math over, the course of almost 10 years now, that money adds up. So same thing with Rich, same thing with Annaly. And Organon was actually part of a split when we owned Pfizer, I believe. So Pfizer split off a piece of its business, and because of that, Pfizer gave us a share of Organon. So it was a gift. So or a dividend, you can call it, in the form of a share. And so we just hold on to it. Organon is actually doing fairly well. I don't think it pays a dividend, but again, we're just holding on to it. If we ever needed to sell, we can, but it's like 1 share, and I think the stock price might be somewhere around $20 or $30. So, if we ever need $20 or $30, we have it available. But until then, we're just going to hold on to these, and that's what I'm calling them, our orphan shares. I think that is it. Um, you can see last month's change in available cash, and this is actually the amount that we made last month, which was the $73. And this is mostly, that's what I want to show. So I thought this was pretty cool. So the way that $73 breaks out is, so the companies, they pay dividends every 3 months. Okay. And so we own what, like five, six companies, I think. And so they're not all on the same schedule. But it what I've learned is it's about, I think we have two groups of companies that are on schedule together. So about every 2 months, half of our companies will pay out a dividend, and we'll make something like $200, $300. And then 2 months later, we'll have another group of companies that pay a dividend, and again, it's another $200, $300. But in the meantime, we do get still those smaller dividends from other companies. And so, August was just one of those months where we didn't get any big dividends, but we're still getting the small stuff. So $12 of dividends. Again, I've been able to sell some options pretty much every month now. So that's really cool. And that netted us $63. And then we do have to pay an options fee for that. And that's the $2, and that is also reflected um, on our um, on our commissions down here. Yeah, option sales 63, then options fee $1.98, and then I also record this stuff by year. So far since July, we've paid $8.63 in options fees. Only 33 cents in sales fees, um, but we've made $175 so far in options, $780 in dividends, and $743 in sales. If we look over the life of the portfolio, you see we have made $11,000 in sales, and we've paid roughly $2,700 in fees. And same thing here, over the course of this portfolio, almost 10 years now, we've only paid $235 in options fees because it's only like maybe 20 cents per option or something like that. But we've made $9,500 in options, and 97 in dividends. So like I said, not terrible, but not awesome either. So definitely want to continue to work to make this better.